Okay, so hello everyone. My name's Serena and thanks for joining us. So this is the GP Personal Finances and Tax Made Easy webinar, and it's brought to you by my Locum Manager and BHP Chartered Accountants. As I said, my name's Serena, so I'm a locum GP and I've been locuming for a couple of years now. I'm also co-founder of the online toolkit, My Locum Manager, which is a website that empowers locum GPs to stay on top of their finances and keep all of their locum work organised. You can see some of the time and money saving benefits we offer on this slide. Now, as I said, this is our second webinar with BHP Accountants, and it has one simple aim: to help you understand income and tax in a way that helps you be more tax efficient as a GP. Now, we offer a lot of additional resources for locums, which you can find out about on our Facebook page. Now, just to give you an overview of a bit of housekeeping, so the webinar should be about 30 minutes and we've packed it full of really useful nuggets that you can take home and apply to your finances and your income. By the end of the webinar, the aim is that you will know how to be more tax efficient. You will know how to make the decision about being a sole trader or limited company, and about what expenses salaried and locum GPs should be claiming, and much more. Stay on for the live Q&A session we have, which our specialist accountants are going to be answering for you and also providing you advice on any specific topics that you may need help with. You can put your questions through as the webinar goes on, and I'm going to be collecting them. I know many of you have emailed in quite a large number of questions already, so I'm going to do my best to get through the questions. So the sooner that you send them through, the quicker I can add them to the list, and hopefully we can deal with them during our live Q&A session at the end. So without further ado, I'm now going to hand you over to Jenny, who's Head of Healthcare and Associate Partner at BHP Chartered Accountants.
Thanks, Serena. Hello, everybody. I just wanted to spend just a couple of minutes just telling you a little bit about BHP, for those of you who don't know us already. We're a top 40 firm in the UK, and we have a large healthcare department that's headed by myself and Colin Hoare. Colin's also with us today. We are a member of ASMA, which is the Association of Specialist Medical Accountants, and we currently act for around 100 GP practices and also about 450 locum GPs. We do quite a number of finance courses across the UK, 15 geographical locations, and many of the ST3s that we teach move on to become locum GPs. We offer a number of specialist services to our doctors. I've listed some of them on the screen. NHS pension, we have a number of experts in that field. Large VAT department. We also offer a payroll bureau and auto-enrolment advice, and we also have an employment taxes department. And we did a webinar a little while ago about IR35, which you can access on our website. But tonight we're talking about personal tax, and we've got Kirsty Swinburne here. She's a senior tax manager with 2 professional qualifications. She's a chartered accountant and also a chartered tax advisor, and Kirsty has extensive expertise in acting for individuals and also partnerships. So I'm going to hand over to Kirsty now.
Thanks, Jenny, and welcome everybody, and good evening. Thanks for joining us. As has been said, this is a quick run through the basics of the tax system, with particular regard to how it affects GPs and GP locums, highlighting areas where you can be as tax efficient as possible, and also hopefully pointing out the areas, potential pitfalls to avoid. Despite the title of the webinar, it has to be said there is very little that can be said is easy about the tax system, and it does seem to get more complex each year. But what we're aiming to do in the next 30 minutes and then the questions after is to show you a simplified view of the basics, and also highlight areas where both BHP and my locum manager can take some of the stresses and strains out of the tax system for you. So we've listed there the main areas that we'll be covering. So moving swiftly on to the basics of tax and national insurance. The amount of the tax you pay depends on the total income that you have each year. So you add up all your income from all the sources, take off various reliefs which you can claim, which for doctors the big one is the superannuation payments, and then that total income determines both the amount of tax and the rate of tax that you pay. The bands and the rates of tax are set each year in the budget, which always used to be in March, but we're now moving to an autumn budget, we believe, so there'll be further updates on that later this year. But for the current tax year, which began 6th of April, the income tax rates are set out there. You'll see that for the first 11,500 is tax-free. The next 33,500 is at 20%, and people who pay tax in that bracket are known as basic rate taxpayers. Once you move into paying some tax at 40%, which I believe most of the people attending this webinar are probably in that bracket, they're higher rate taxpayers. And then once you get above 150, then you're into what's called additional rate tax. One point to watch out for here, though, is that personal allowance of 11,500 starts to be withdrawn where total income exceeds 100,000. So it's actually completely gone by the time income has got to 123,000. And without going too much into the maths of it, within that band, you're actually paying tax at an effective rate of 60%. So that's one to watch out for. If your income is in that 100 to 123, it might be worth getting advice, because there are things that can be done to improve the situation. So that's something to look out for. Later on in the webinar, we're looking at taking money out of a limited company and comparing and contrasting self-employed with a limited company. So for that, it's important to note there are actually different tax rates applied to dividends, which is money taken out of a limited company essentially. And you'll note from that little note there that they're actually significantly lower than the standard income tax rates, and that's an important point to remember for later on. So just looking at the calculation of tax, here's an example where the gross total income is 80,000. Then taking off the superannuation, taking off that 11,500 personal allowance, gives a taxable income of 66,500. Working through those tax bands we saw a minute ago, that gives you a total tax of 19,900 on a gross income of 80. Looking now at national insurance, this is significantly different to tax, even though there is an argument that these days it really is just another tax, but it's levied in quite a different way. The important point to note here is that although tax and the way it's calculated is the same, whether you're classed as employed or self-employed, national insurance is significantly different. Salaried GPs will be classed as employees and they will pay class 1 national insurance. Locum GPs will be classed as self-employed and they pay class 2 and 4. So for the current tax year again, I've listed out there the rates of the class 1 national insurance, which will be paid by salaried GPs. And the important point to note there is that in the chunk between 8,000, about 8,000 income and about 45, they're paying tax, national insurance rather at 12%. Above about 45,000, it's at 2%. Class 1 is calculated on a monthly basis and is deducted and paid over to HMRC via pay as you earn. And just to note there that employers also pay 13.8% on salaries for salaried GPs. So just working through an example there, as we say, salary, class 1 national insurance is paid monthly. So we need to divide each of those bands by 12 months to get to the monthly equivalent. And working through the rate bands, which I'll not do in detail, but you'll see that if each month is the same as this, you'll get an annual equivalent of 5,900 class 1 deduction on a salary of 80,000. So turning now to the self-employed and locum GPs, they pay two sorts of national insurance at the moment. They pay the class 2, although this is to be planned to be abolished from April next year, and a profit-related class 4. The rates down there are listed again, and the important point to note here, I think, is that on that band we looked at earlier, where employees were paying at 12%, the self-employed are paying at 9%, and that is actually quite a significant difference, and it's one of the big distinguishing aspects between employed and self-employed and the amount they pay. Class 4 is calculated on an annual basis, not monthly, and it's paid through the self-assessment system along with the tax on the 31st of January and 31st of July each year. The class 2 is just a small amount, £2.85 a week, and that again now is paid through the self-assessment system. That's what in the old days used to be called a stamp. But as I say, that's on its way out. So looking now at an example with the same, we're now looking at 80,000 annual profit. Working through those bands, you've got total class 2 and 4 NIC for the self-employed of 4,700, and if you remember, that will contrast with the 5,900 on the same income level for a salaried GP. So it is quite a significant difference. You may remember that in the March budget, the Chancellor talked about increasing that rate of class 4 national insurance. That was then retracted, but I think the belief is that probably in this new Parliament that will come back in, and it is looking at reducing this gap between what the self-employed and the employees pay as national insurance. So apart from national insurance, what are the difference between employment and self-employment? Salaried GPs who are employees, they have tax and national insurance deducted from the salary under the pay-as-you-earn system, so that the net pay they receive each month is theirs to keep. It's had all tax and national insurance deductions made from it. They don't need to put anything else aside. The amount of tax is deducted determined by the pay-as-you-earn code, and this is issued to the employer by HMRC. The individual should receive a copy, and it's important to ensure that this is correct. The basic code, if you're not got any restrictions or claiming any expenses, is 1150L for the current year. And now this will appear on your payslip, and it's worth just double checking that code and seeing whether it looks right. So if it varies from the 1150L, then you should have received a breakdown of how it's made up. Locum GPs, by contrast, are self-employed, and they must keep their own records of income and expenses and prepare annual accounts. And the tax is then paid January and July via the self-assessment system. So it's a very, very important point to note that actually you're receiving gross income. The tax will come, what we'll see later, can be quite significantly later than you receive the income. And that is a very, very important point to remember, because it can catch people out. The self-employed can generally claim more expenses than employees. And as we've seen, the national insurance is lower. So how do you claim expenses if you're an employed or self-employed? The self-employed, as we mentioned earlier, it's more generous. They can claim against tax for expenses which are wholly and exclusively incurred for business purposes. An example of that is a stethoscope. That would be a wholly business expense. You don't use it for anything else other than your business. But for example, a pair of glasses wouldn't. Even if you use them for work, they have a dual purpose, and so they wouldn't be an allowable deduction. For some expenses, it's actually possible to apportion them between the business and non-business element, where there's an identifiable part which has a wholly business purpose. An example of this is motor expenses, mobile phone. You could say, yes, I use my mobile phone for about 60% of the time business, and then you could claim 60% of the costs. Computers is another one like that. The typical expenses that locum GPs can claim are listed there. Professional subscriptions is a really big one. Use of home you can claim, postage and stationery, things like sat-nav, books and journals. There's a more detailed list, and expense pro forma can be found on the My Locum Manager website, and it's worth checking that out. Turning now to salaried GPs who are employed, it's a very different test. For an expense to be deductible against tax, it has to be wholly and exclusively, like the self-employed, but also necessarily, and also incurred in the performance of the duties. Now, in practice, this is a much stricter test, largely because HMRC will always argue that if an expense is necessary for your employment, then your employer will pay. I mean, we all know that's not the case always, but it provides a hurdle that has to be got over in the first instance. And also in the performance of the duties, that is another quite strict test. It can't be in preparation for your work. You have to actually use it during the course of your work. And some good news to lighten the mood after that. There was a recent win for the taxpayer in the Dr. Banerjee tax case, which he was a dermatologist and claimed for certain exam expenses, and he actually won that tax case because it met the in the performance of the duties test. Now, it was since decided that the RCGP exams also fall into that category if they're undertaken under a training contract, so that actually passing the exams is one of the duties of employment. and that claim, you can go up to 4 years back to make a claim for your RCGP exams to claim that expense against tax. So if that applies to you and you've taken exams in the last 4 years and haven't claimed them, then that's worth looking at doing, because it can be quite substantial. Other expenses an employee can claim is professional subscriptions if they've not been reimbursed by the employer, indemnity insurance, and certain travel costs. And those are agreed mileage rates at which you can claim if you've not been reimbursed by your employer. So travel expenses, hugely contentious issue. You could spend a whole webinar on that alone, to be honest. The ordinary commute to work is not allowable for either the employed or self-employed, but there's been a huge raft of case law and guidance on what constitutes a regular commute. To simplify it hugely, employees can claim for travel to work if it's a temporary workplace, and that's generally one that's expected to last less than 24 months. HMRC, actually there was another tax case and they won it this time. It went against the taxpayer, and that was the Dr. Samadian case, where basically it was ruled that self-employed can't claim to what is a regular place of business, somewhere which you go to with a degree of regularity once a week, where you're expected to be there. That can no longer be claimed. So that has actually narrowed the gap between what employees and the self-employed can claim for travel expenses. The actual mechanics of making the claim, the self-employed do it through their accounts, which are then entered on the tax return. Salaried GPs who aren't required to submit a self-assessment tax return make an expense claim to HMRC and have the expenses adjusted for in the pay-as-you-earn code generally. The best way of doing this now is through the personal tax account, and we've shown there the link. It's quite easy to set up. You need something like a mobile phone, a passport, or other form of ID. You can set it up very quickly, and then it allows you to access quite a lot of information which the HMRC hold about you, and you can make the expense claim through that account. So that is worth setting up and looking at. But I think we've seen there that for both salaried and locum GPs, the vital thing is that records have to be kept. If you're making an expense claim, it has to be backed up by records, invoices, which HMRC can ask to keep. My locum manager has a way of recording those real time to save you time at the year end or what have you, and to make sure nothing's missed. So you're starting in self-employment. You've been salaried up till now, having everything deducted by pay as you earn, and you're starting self-employment. What are the things that you need to do? The first thing is notify HMRC as soon as possible. The deadline isn't until the 5th of October following the end of the tax year in which you're started. So say you started self-employment on the 1st of August, you have to notify HMRC by the 5th of October 27 at the very latest, but we would recommend that you do so before. If you already complete a self-assessment tax return, you'll have what's called the UTR, the 10-digit unique taxpayer reference. So all you would need to do is complete an online CWF1 to notify that you've started in self-employment. If you're not already registered for self-assessment, you need to do so and receive that 10-digit reference, the UTR. Most vitally, you must start to keep all records of all income and expenses, and obtain the services of an accountant who specialise in medical practitioners who will be able to guide you through all that you need to do and avoid the pitfalls. I need to mention here that the tax system as we know it is due to change dramatically. It's part of what HMRC are calling the Making Tax Digital programme, and part of that is an enforced digital record keeping and the filing of quarterly reports to HMRC. When this was first announced, it was hailed as the abolition of the tax return. Far from it, actually. It's going to mean that either 5 or more returns will be needed each year rather than the one that we do at the moment. So it's important that we're ready for this. On the current timetable, it will start from 6th of April 2018, phased in depending on various factors. But it has to be stressed the legislation isn't yet in place. We expected it would be by now, but it's not. But the belief is that it will come in, and it will come in sooner rather than later. So the time to prepare is now. And obviously BHP and my local manager can help you with all the steps that you need to do that. So the pitfalls that I mentioned that you need to avoid. The first one is budgeting. As we looked at earlier, if you're an employee, you have all tax and national insurance deducted before you ever get the money. With the self-employed, that isn't the case, and it can be up to 22 months from the date you start in self-employment before you pay your first tax. And this catches so many people out. So if you don't take away anything else from this webinar, do take away the fact that if you start self-employment, it is vital to get a tax estimate from your accountant as soon as you start, to get an idea of what you need to be budgeting for, because that can come as quite a nasty surprise. Because just looking at some of those dates, say you start as a locum in self-employment 1st of August 2017, as we've looked at, you need to register by 5th of October 2018, if not before. You will then submit a 2018 tax return, which will show the profits from the start date 1st of August 17 through to 5th of April 18. This must be filed by 31st of January 2019, unless you do a paper return when it has to be the end of October 18. The tax and national insurance isn't due until that 31st of January 2019. So you can see that's quite a long time after the start date of August 2017. And on that date, you will also be asked to pay half that amount again as the first payment on account for the following year. So it could be quite a significant payment. There's a £100 filing penalty if your tax return isn't submitted by the deadline, and a 5% surcharge if the tax isn't paid by 30 days after the due date. So that's a lot of information to take in. You'll be able to look at the slide later and remind yourself of those dates. But as I say, the important thing is to budget, to be prepared for that first tax payment. I can't stress that enough. So one of the most frequent questions we're asked, self-employed, should I operate as a limited company? It's the typical sort of conversation down the pub. Somebody says, oh, I save an awful lot of tax by operating as a limited company. There's less now since there's been the changes in the dividend rates, and it's important to stress there is no right answer for everyone. For some people, it's the right to operate as a limited company, for others it won't. The important thing is if you're in the NHS pension scheme, because you can't stay in the NHS pension scheme if you operate through a limited company, so that often just shuts it down as an option for a lot of people early on. But if that is still an option for you, then it's important to stress it's not just a tax question. There's increased administration costs of operating as a company because it's a separate legal entity. It's a totally different legal person than if you operate as a self-employed. And with that become a lot of reporting obligations. So even though we're saying it's not a fully taxed decision, it's often, the incentive to incorporate it is often tax driven. And that's because we have a corporation tax rate which companies pay of 19%, with plans at the moment to reduce that to 17%. And when you look at that compared to those income tax rates we looked at earlier of 40%, 45%, it can look a no-brainer to operate as a limited company. But what you need to bear in mind is that it's also cost of taking the money out of the company. Dividend is usually the most favourable route, and as we looked at earlier, those dividend rates are low compared to income tax rates. But as we'll go on to see, it depends very much, and that can actually cost you more operating as a company. And the first example we'll look at here is with a profit of about 60,000. Working through the tax rates as we did earlier, that would leave you with net income after tax and national insurance of 43,537. Take that same profit level as a company, pay the corporation tax, and then importantly, if you distribute all of that after-tax profit by way of dividend, go through the dividend tax rates, you're left with net income after tax of 45,292. So you'll see that is higher than if you operate as self-employed, not hugely higher, not as much as it used to be. And to be honest, quite a lot of that will be eaten away by increased administration costs. But then if you look at a position where the profit is 250,000, applying the same logic, you self-employed are left with net after-tax income of 144,000. Doing exactly the same on the company side, again distributing it all by way, all the after-tax profit by way of dividend, you're actually left with net income after tax of 142,000. So you can see this time it's swung around the other way. Again, the difference is only about £2,000, but it's the other way. So this is why there is no right answer for everybody on this scenario. So there are things we need to look at. Does all the profit need to be extracted? Those examples I've shown you would vary hugely if some of that dividend was left in the company. because the more that's left in, the less is subject to dividend tax rates. And there are at the moment, there are tax efficient ways of extracting that money when the company's wound up, with the possibility of a 10% tax rate on those retained profits. Another thing to look at is, would there be more than one shareholder? For example, a spouse who is paying tax at a lower rate, some of the dividend could go to them. And again, that changes the equation quite a lot. The biggie is, does IR35 apply? This was, as we mentioned before, the subject of a previous webinar. And if it does, a lot of the savings, if not all, are immediately eroded. So that's something that would need to be considered very carefully. I'll not go into all the IR35 stuff again. We'll just direct you to that webinar if you think that incorporation is something you might want to consider. This whole issue of whether or not to incorporate is a huge area, and we are planning to return to this in a future webinar. So I think, to sum up, being tax efficient really makes sure that all claims and expenses, you're claiming everything that's available to you. Keep records. That's obviously for the business expenses that we've looked at earlier, but also other things which can reduce your tax liability, such as any gift aid donations you make, any additional pension contributions. Record keeping is vital. Be aware of those HMRC penalties, not only the deadlines, but if there's an inaccuracy in your tax return, the penalties can be as much as 100% of the tax due. So it's be very aware of it, get it right. It's not worth claiming something which you shouldn't do, because the penalties can be quite high. So claim everything you can, don't claim what you can't. In order to make that distinction, expert advice is often needed. And as we've said throughout, my local manager and BHP Chartered Accountants can help with that, and please speak to us. So with that, Serena, I'd like to hand over and see whether we've got any questions come in.
Thanks, Kirsty. Yeah, we've got quite a few questions come in. I'm going to do as many as I can before we finish the webinar. And if you have any questions following that, you can email me at serena@mylocammanager.com, or you could, if it's a tax specific question, Kirsty's email is on the slide now. So I'm just going to crack on with the questions. And as I said, we've had quite a few through. So are you ready, Kirsty? This is going to be like putting you in the hot seat.
Yeah, sure.
So,
I'll refer to my colleagues, Colin and Jenny, when required.
So one of the questions we've had here, so how often can you reasonably buy a new phone and computer and claim it as an expense?
I've never seen that one challenged, to be honest, and I've seen some where the claims are pretty much annually. I think because it's probably recognised that technology moves on, and I've never seen that challenged. Have either of you two?
No.
Yeah. So I think we'd say as much as often as you need to, and as often as that expense is incurred.
Great, I'm off to the Mac store after this.
Yes.
But I think that's really useful to know, because obviously everyone gets an annual phone upgrade, and sometimes you buy a computer and you have an iPad as well. So if you're locuming and you're using, just to give my locum manager as an example, I do my invoicing and all my pension stuff either on my iPad when I'm around at home on the site, or just on my phone or computer. So I technically use all three for locum work-based things. So I would prefer to actually try and claim as much as I can to reduce my tax bill. But I think everyone's in that same boat where they'll have multiple computer equipment, and they upgrade often annually. So it's good to know that they could probably put that in as a claim annually as well. Within reason.
What we'd look for is some element of private use restriction. I think it's unrealistic to say that everything is used 100% business use. So that comes on to this business private apportionment that we mentioned in the slides. So it would just be a question of, it's not scientific, but just coming up to some reasonable apportionment of how much you use each of the devices for home use and how much for business, I think.
Okay, so just putting my GP hat on, when you say apportionate, are you saying, so I have to, me and obviously everyone tuning in has to say we are using our laptop, 80% of the time for work and the rest of the time for home, therefore we would claim 80% of that cost. So it's up to us to calculate how much we're using it, essentially.
Yeah.
Okay, great.
I
And then, so that answers that one. And then, okay, this is quite an interesting one. I own a home in London, but rent in a different area of the UK where I work, as I completed ST3 training there. Is rent an allowable expense?
No, generally. The time when it is if it's what they call an itinerant appointment, which is where part of your role is to move with that job, and where it's going to be temporary, which this is where the 24 months comes into it. So if we're operating, you live, say London, you could be in York one week, you could be in Leeds another, you're not in a settled place, then in most circumstances, the accommodation would be allowable. But it is an area where there's been a massive amount of case law. It is actually quite hard, if not impossible, to get, unless you're in that very sort of itinerant position to get, because the HMRC's argument is where you live is your own choice. You're choosing to live away from your workplace, or choosing to have your home away from the workplace, and therefore the accommodation costs are not tax deductible.
Okay, that's really useful to know. Another question, can we be a salaried GP and a self-employed locum at the same time?
Definitely. If each one of those engagements is meets the conditions to be employed or self-employed, then definitely that's not an issue at all, and in fact happens quite frequently.
Most of our GP locums are both self-employed and employed. They're on salary GP position and do self-employed locum work. It's probably the norm rather than the exception.
Sorry, Colin, can you repeat that? I lost you there. If you come closer to the microphone.
Most of our locum GP clients are both employed and self-employed, so I would say it's the norm that they're under both categories rather than being one or the other.
Okay, so moving on, we've got loads more questions coming through, so I'm going to try and blitz these as much as I can. Can we claim back exam expenses incurred as a locum GP? Oh, sorry, that was another question follow-up. Can we claim back exam expenses incurred as a registrar after becoming a locum, i.e. when self-employed? When they were registrar, they had some exam expenses, and now they've become a locum. Can they do a retrospective claim?
Not against the locum income. You can only claim against the locum income expenses that were incurred after starting as a locum. But if it meets the conditions that we looked at in the Dr. Banerjee case, then you can make a claim 4 years previously, but it would be against your registrar, your employed income, and it would have to meet those conditions. You can't claim against locum income for an expense that was incurred before you started.
Okay, so how would they do that? So say they're now locuming, they were a registrar, and I know there's quite a few registrars who've signed up today, so I think a lot of you will be in the same boat. They've paid for their exams, and now they're going to be starting in the world, or they have started in the world of locum work. Do they just write a letter to the tax office themselves, or do they just ask their accountant to sort it out for them and give a receipt for the exams? What's the best way they can do that?
Yeah, if they've got an accountant, it certainly would be better for them to do it, because there is a sort of fairly standard wording. If not, there is guidance on the RCGP website about claiming the exam costs. But essentially what they need is the invoice for the exam fees that they paid, and they will also need their training contract number and a copy of the training contract, which effectively stipulates that passing the exams was one of the duties of employment. Those tend to be the three things that we need to submit with a claim.
When we pick up the new locum clients, we tend to do a back claim at that point. So we'll do a claim for the last 3 or 4 years at the point we do the first tax return by writing to HMRC. So that's a normal process as we see when we see the new clients.
Okay, so I've had 4 questions which all kind of are saying the same thing about expenses and a list of expenses. So I'll just answer that. If you want a breakdown of all the list of expenses you can claim as a locum, as a limited company or a sole trader, if you go to mylocummanager.com/resources, there's an expense performer there. You can just click that, download it, and it has everything that you could be submitting to your accountant, and all the details are there. We're also going to be sending out these slides, so there's a list of a few things on there which you can also reference. So that's mylocummanager.com /resources, and you can just print them off there. Okay, so next question. Sorry, there's so many coming in at the moment. I'm just trying to decipher which one to do next. Okay, this is quite an interesting one. Oh, sorry, someone else has just messaged. Someone said, can I clarify, if we are buying a new laptop and it says it's 100% for work, then A, do we get 100% of the laptop price refunded from tax? And B, how do we prove we are using it for the specified amount, i.e. 100%?
For a start, I would say I think 100% might be pushing it. We would all say to our clients, it would take some proving to HMRC that it wasn't used for private use at all. I think really you'd need to prove there was another computer or something that you were using for private use. As regards what record keeping you need to do, I've never actually seen HMRC ask for records of what the business-private split is, and that's why we've always sort of gone for as long as it's reasonable, and that's why I don't think 100% would be that easy to justify. As long as it shows that there has been some attempt made to restrict it for private use. I've never seen detailed records asked for as to how that private use has been arrived at. So I think it's really, if you're going to say it's a very, very high and certainly 100%, I think you would need to justify probably why that was and what you were using elsewhere. But then yes, you can claim for whatever that business use is, you claim in the year the cost was incurred.
In theory, it's the time you spend on the laptop for business against the total time spent on the laptop. So if somebody was suggesting 100%, we'd be suggesting to them they should keep records, because it's very difficult to argue you've not had one usage for private use. But HMRC really would only push that if there are other issues within the tax questions coming to the client.
Okay, so I think the take-home point is, if you're buying technology such as laptops, iPads and computers, you're probably better off giving a percentage like 70% or 80% for work, but including a personal allowance in there, so that it doesn't attract unwanted attention. But if you are using it 100%, then you need to document and maybe have a way of proving that if you were ever challenged on it. Would you agree?
Yeah, I would agree with that.
Okay, great. So another popular question, so we've been asked this a couple of times, so I'm just going to summarize it. People are asking, can they work as a limited, partly as a limited company, but also partly as self-employed? Is that possible?
It is. If it's different contracts or different arrangements you've got outside the limited company and within. If there was one contract which you basically contracted for your company with the end user, that wouldn't bar you from taking on a self-employed role with somebody else. How usual it would be, I don't know, because you would tend to do one or the other. But it wouldn't be impossible if there was distinct contracts.
Yeah, it might become more common now after IR35 came in from April 16, and we are seeing some people who previously had work through the limited company, and that work's got to come out from the limited company.
Where the end user's a public body, you mean?
So that's been treated differently going forward, but yeah, possible.
Yeah.
There's also a non-tax Serena, there's a non-tax point, and that's to do with indemnity insurance.
Yes.
If the GP is working through a limited company, they do need to get in writing from their indemnity, ensure that they're covered for that limited company work, because it's a separate contractual position as opposed to them doing the work personally.
Okay, all right. So you can do, so the question here was, can you do 50% self-employed to contribute to the NHS pension and then 50% as a limited company? So essentially what this question is relating to is, if they're doing 50% of their work through a limited company and they're then doing 50% as a self-employed locum, are they still able to pension that 50% as a self-employed locum?
They are, as long as the contracts are in the right place, because if you're working, the limited company work needs to be contracted to the limited company, whoever the GP is working for, and the self-employed work is between the individual and whoever they're providing services for, which presumably is NHS work if it's pensionable. So it's down to what contracts are in place.
Okay. So another interesting question. so it says home office. So when you're using your office as a home, how is this calculated, and how much are you entitled to?
Right, there's two ways of calculating it. There's the actual method, which you add up all the costs that you spent on running the home each year, and then you work out what proportion of the house you use as an office and for how long, and then you claim that percentage. That's quite an onerous record keeping task. So HMRC have brought in these simplified expense claims, which I can't reel off the top of my head, but are quite easy to find, and I can email to anybody who's interested. But basically, it's a set amount that can be claimed depending on how many hours a month you've worked at home in that month. There is supposed to be record keeping for that. Again, I've not yet seen it challenged. They've been in 2 or 3 years, these new rates. They're not overly generous, it has to be said, but it does cut out an awful lot of the record keeping.
You have to be claiming at least, or you'd have to be working at least 25 hours a month to be able to claim anything. So between 25 and 50 hours a month, you get a tax allowance of £10 a month.
Yeah.
So tax relief against £10 a month.
So tax 120 a year. So we're not looking at big amounts really.
Okay. So next question's from Nikki Yates. She says, I've just bought an ophthalmoscope and full doctor's bag to set up as a locum now, but I'm employed, but it was bought for the purpose of locuming. Can I claim this in future?
You could only really claim it, well, it would be hard to claim against employment income because of what I talked about before, this necessarily barrier. If you could prove that it was necessary if you used it during your work, but the employer didn't provide it, then you stand a chance. It would be easy against self-employed income. It's straightforward. Yes, you can claim. That's a wholly business expense, no issue whatsoever. Claiming against self-employed income. But if you don't have self-employed income, even if that was the intention, it has to meet the conditions to claim against employment income, and you would need to really win that argument that it is necessary for you to use, but it isn't provided by your employer.
Okay. Someone else has put that they, oh right, sorry, Nikki's just saying, no, I bought the equipment to set up as a locum for my self-employment, but it has been bought whilst I am employed as it needs to be delivered in time for August. Okay.
Oh, so, right, that's fine, that's no problem at all.
It was a typo on her first message,
Yeah, that's fine. No issue with that. Just claim it against your first set of locum accounts.
Okay, Nikki, you can breathe a sigh of relief. You can claim it. You can claim it all.
Okay. That first set of accounts.
Yeah. Okay. So I'm just going to keep blitzing through these because we've got quite a few to get through, and they're all quite important. Okay. There's one on car mileage. A few of you have mentioned about car mileage actually. Is it best to keep detailed mileage for personal and business mileage, or just use a percentage of the overall mileage that is business? So I can answer part of this. So if you're locuming and you're using My Locum Manager, it will automatically calculate from the data that you've inputted what your mileage is from your home to your practice, and you can also input any home visit mileage that you do. But for accountants purposes, could you maybe comment on, do they need to keep anything additional regarding their personal mileage and business mileage other than say what My Locum Manager would collate for them?
No, I don't think they do really. I mean, it is important that that people log the business mileage. I have to say that there are probably a number of our clients that don't actually log it, and we end up trying to estimate it at the end of the year. But as long as it's a reasonable estimate and you're thinking about how many business miles you're doing each week, then that's usually acceptable.
Okay, so there's more questions about expenses and then pensions and then IR35. So we're going to try and get through as many of these as we can. So apologies if I'm talking really fast. So a question from Saif Patel: can we claim full amount of GMC, RCGP, medical indemnity fees from tax, or is it only a certain amount?
All of them.
All of it, yeah. Fully business expense, yeah.
Okay, great. And then, so there's a question here that's just popped up. Okay, so this is from Chun Locke, who's saying, when declaring income on self-assessment, do you have to declare the pension contributions as well? So for example, gross income for 1 month is 6,000, but the employer also pays £1,000 pension on top of that. So for that month, you're paid £7,000. So do we declare £7,000 or £6,000 on the self-assessment tax form?
Is that a locum GP, Serena?
That's right. Yeah, sorry, that's for locum GPs.
Yeah, so, and you're talking about £1,000 employer contribution?
That's right.
Yeah, so we declare £6,000 as the fees. The £1,000 for the locum is money in and out.
Okay, so do they don't include that in their cost?
Not for locums, no.
The locum will receive £7,000 but pay £1,000 over to NHS Pensions Agency along with their employees' contribution, and the employees' contribution would be claimed on the tax return.
Okay, right. Okay, next question is from, wow, everyone who's attending can type really fast because this list is jumping up and down. Right, where was I? Can we claim for exams that we have failed and needed to repeat? So i.e. claim twice for the same exams?
I think we probably can. I've not
Really good question. Yeah.
Yeah, it is.
I don't think anybody's ever admitted to failing.
But they're so expensive. The exams are such a cost, and it's not just the price; it's the time and the emotional cost of having to sit through it. So I guess it's a valid question. If you've got to pay again, you know, from a few hundred to a few £1,000s, would it be right that you could claim that again?
I think it would on general principles, because it still meets the conditions of it's a cost incurred in the performance of your duty. If it meets the conditions to be allowable in the first time you sit it, I think it meets the conditions to be allowable the second time you sit it and the additional fees. So I think you can, but on that basis that it's if it met the conditions the first time, it still does.
Okay. So next question, Nikki Yates again. So pensions, just found out Capita have not paid in any of my pension contributions this year as a GP registrar. How can I ensure this doesn't happen when I start locuming? What's the best way to avoid this happening again? So I can probably answer that partly for you in terms of regards from a locum point of view. I think a lot of people, you know, I'm sorry to hear that you've had this trouble as a registrar. A lot of locum GPs, including myself, have had a number of issues with regards to our locum payments with Capita. The site that I'm involved with, my locum manager, logs all the pension data that you're paying, all your pension forms. Therefore, whenever you're submitting them, you will have your own personal log of everything that you've paid. So if there is any disputes, you have something to fall back on. Otherwise, you could by all means manually track it. I've had colleagues, friends who are locums who have tried calling Capita, emailing Capita, and it's really variable about what response they're getting. I have been assured by representatives of the BMA that everybody's working hard to resolve this. So I guess until it's resolved, keep track of everything you're owed from your registrar year. But as a locum, maybe use my locum manager or some way of documenting all your pension payments so that you know what you're owed. So if you're not paid for it, you're able to back that up with some form of writing. I don't know if Kirsty or Colin or Jenny, you want to add anything to that about pension payments, because the other thing is, obviously, if the pension payments are really late, they may not be, there's a 10-week window usually, so they may not be included, and that may affect the tax return, because obviously you get some tax relief on your pension contributions, don't you, as a locum, if you're contributing to pension.
The key is, Serena, keeping evidence of what's being paid. So if Capita don't do the admin properly, if the GP's paid the money over, then we would claim that on the tax return as long as they keep evidence they've paid the money. And at the end of all of this, it's getting a pension quote on an annual basis to ensure when you're a GP, locum or partner that you've got the right credit for the pensionable income. And in the meantime, you need to keep the evidence for when you get the pension quote to argue if the figures aren't showing correctly. So the key is the pensionable income rather than the contributions, because they determine the pension in due course. And on an annual basis, that quote can be obtained free of charge.
Okay, great. Okay, so somebody else has written, so I have a limited company which I locum through. For my tax year as an ST3 in 2016 to 17, my income was low basic rate. I've got a lot of deductible expenses for 2016 to 2017, which I have yet to claim. Could I backdate a salary for myself to match the expenses that I will be claiming to reduce my personal and limited company tax burden for this year?
Unfortunately not. You can't backdate salary because salaries are dealt with what's called the RTI, real-time information system, that operates the pay-as-you-earn system. So you can't ever go back and backdate a salary because it would have to have been declared in the year that it was paid through the pay-as-you-earn system. So unfortunately, you can't backdate salary.
Okay, someone else is asking, can you pension 50% of your locum work rather than 100% of your locum, rather than 100%? So I think if you're a self-employed GP, can you pick and choose what you pension and what you don't?
No, in general, you have to pension. You have to pension everything. It's you're either in or out of the pension scheme. So you do have to pension everything. But you mentioned before, Serena, there is a 10-week window for locums where you have to send off the forms and pay over the pension. So if you miss that 10-week window, then you become unable to pension it.
Okay, there's two other really interesting expenses questions before I move on to the ones about IR35 and limited companies. So someone said, can we claim for food purchased and eaten during the day whilst at work when self-employed? And I'm just going to give you the second question now because I'm aware we're short of time. I have a fully electric car. Can I claim for my monthly car battery rental? So yeah, those two questions for you. So can I claim for food purchased and eaten on the day working self-employed, and can I claim for my monthly car battery rental?
Essentially, the self-employed claim for food, it follows the guidelines of what we talked about with allowable travel. If you're out of town for a day on a journey which would be an allowable travel cost, then the subsistence which is associated with that should be allowable as well. In most instances, the answer will be no. If you're in a sort of regular workplace, you can't generally claim for your lunch. It would have to be if it was, I don't know, if you were out on a course at the other end of the country or something, then because that journey would be an allowable cost, so would the subsistence, the lunches that go with it. Turning to the electric car, then you're back to if you're claiming on basically an actual basis, so for all your motoring costs, then the battery for an electric car would be one of those costs. But again, it would be that apportionment that we would need to look at between what percentage is business use, what percentage is private, and that comes down again to the percentages of mileage that we talked about earlier.
Yeah, and Kirsty, someone's asked us to clarify about the claiming expenses for things like GMC fees and subscriptions. They've said, is it only the tax on the GMC fees and other subscription that comes off our gross income, or the fees in their entirety?
It's the fees in the entirety, and then how that works is that you're then given tax relief at the relevant percentage on that. So say it was £1,000 of fees, you would claim £1,000 of fees, and if you were 40% taxpayer, that would equate to a £400 reduction in your tax. But you claim the gross. Yeah,
great. Okay, so another question we have here is, we've had quite a few questions about IR35, so I'm just going to summarize here for those of you that are asking. There are two really useful resources that will answer all of your IR35 questions really quickly. So the first is there's a free IR35 webinar which BHP and My Locum Manager did a few months ago, which is on the My Locum Manager Facebook page. And again, it's similar setup. It's got all the slides with a live Q&A at the end, and you can access it now, and it goes into a lot of detail. There's also an article that I wrote for Pulse. So if you look for Serena Chiba, so Surina, and Chibber, CHIBBER, on Pulse. There's a really succinct article that I did for Pulse about IR35, which will summarize everything you need to know, including how to do the online questionnaire. And that was done with Christine from BHP. So I think for a detailed response about IR35, I would go there. But just to answer some of your points regards IR35, it does not impact all locum GPs. It impacts locum GPs working as a limited company and not all locums working for a limited company. In order to assess if you're affected, there's a HMRC tool that's available. Again, links are on the webinar, which is on our Facebook page or on our blog. And if you're working as a sole trader, you're unlikely to be affected by IR35. So I would signpost you there for a much more detailed response. I don't know if, Colin, if you want to add anything to that.
If it's possible as a self-employed locum, you could be affected by IR35. It depends on the working arrangements between the practice and the GP locum.
Yes, I guess that's the once they do the HMRC tool, that will tell them if they're affected.
That's the practice's responsibility to do the HMRC toolkit and report back to the locum. Yeah, okay.
Someone said, I haven't contributed to NHS pension. So this is from Ramiz Hamid. I haven't contributed to NHS pension for 3 years as I was doing locum work. I'm now going into a partnership in September. What should I do to rejoin the NHS pension scheme?
Are you saying that the individuals left the scheme or just not paid contributions?
I think they've not paid contributions from what I can see.
There'll be forms to fill in by the GP practice that will then start the contributions against that GP's practice income. There's a standard form to fill in that the practice manager will deal with, and then the deductions will be made monthly from the practice account.
Okay, and someone else is asking, can you come out of the NHS pension scheme temporarily, and then is it easy to rejoin again?
Yeah, I think you've got to go back in within, I think it's 5 years. So
okay.
Yeah, don't quote me on that, but I think it's 5 years that you can go back in again.
We always suggest that never come out without taking the appropriate pension advice. So the individuals need to talk to a pension advisor, because there are other issues centred around death in service benefits that are lost when GPs come out of the scheme, for example.
Okay. And someone else is asking, we've had a number of people asking about BHP, saying they're based in, a couple are based in Birmingham, some are based in Wales, and they're saying, do you offer your services outside of your area? Obviously, I know the answer to this, but I'll let you guys answer this one.
We offer, as you're aware, Serena, we offer our services UK-wide, and I think particularly for locum GPs, it doesn't really matter where they're based, because we can deal with everything by post, email or telephone.
Okay, great. Someone said, I started locuming in April 2017 and I'm moving to Australia in February 2018. What would that mean I do a self-assessment in January 2018 or 2019?
It's 2019. They would do a self-assessment tax return up to the date that they left, which would be within the 17-18 tax year. So the tax year ending 5th of April 2018. So they would complete a tax return for that year, which would need to be submitted and tax paid by January 19.
Okay, great. Okay, just last few questions now, because I'm aware we're running out of time. Someone saying, when you're using your, I know we've covered this about using your home office as an expense. How is this apportionment calculated if you use your home as a place of business as well? And then it says what kinds of things can be claimed as expenses. So I've already mentioned you can just go onto the My Locum Manager /resources, and there's a whole detailed list of things you can just download and print, which goes through everything you can claim. But could I ask Colin or Jenny, how is that apportionment calculated regards home office use?
Not better off asking Kirsty that one, I think.
Kirsty.
Yeah, it's often done on floor space or number of rooms. One thing you do need to be a bit careful of is if you're claiming that it's an exclusive use of that room, so you use it 100% as an office and there's no private use, yes, that means you can probably claim a bit higher on your use of home in the accounts each year, but you do need to be careful because it could impinge upon your capital gains tax exemption, which we all have for our main homes. For when we sell our main house, it's exempt from capital gains tax. If we say that one room in the house has been used exclusively as an office, there is a danger that that full exemption is no longer there. So you just have to weigh up one tax to another. But it's generally on floor space and the proportion of time that it's used as an office. So it's great. It'd be better to the place you use an office to go and watch telly in it in the evening or something, and then that stops it being 100% business use.
Okay, great. So last few questions now, and obviously anything that we can't cover, you can email myself, Serena@mylocummanager.com. If it's locum related, if it's tax related, you can contact BHP on the slide, on the email address that's on the slide. But just last few questions to finish. So someone's asking, does My Locum Manager have an iPhone app? So the answer is, it works as a web app, so it will work on your phone. I use mine, I've saved it to my home screen, and it works essentially like a web app, but it's a website, so you can use it on your tablet, your iPad, or your computer. I just save it to home screen so I can use it as an app. The next question is, can you claim for work-related diploma, conference travel, or research costs via a limited company?
So you're operating as a limited company, can you claim for those expenses? Is that the question?
Yeah, so for work related, I think they're doing kind of conference travel and research costs, and can they claim via a limited company for those things?
Well, the rules on what you can claim within a limited company for that sort of expense are pretty much the same as you would claim as an individual, and it really has to be incurred in the course of doing the work. There's this whole capital versus revenue split, which essentially, if a course fee is giving you new skills, then even if it's business related or totally business related, it's not an allowable deduction against that taxable year because it's giving you new skills. So it would be the same within a company. If that company was currently operated to do GP locum, standard GP locum work, and this was an area of specialism which would open up a whole new area of work, there's a question that could be capital and not allowable. So it follows pretty much the same rules as a limited company as a self-employed or individual would. But that again, it's a huge area just on itself.
Great. So someone's asking, this is another really good question. Any tips on how many locum sessions one can do realistically to maximize income fully in view of tax? So I think, Kirsty, this is what you and I were talking about the other day about the threshold where it gets to a point where anything you're earning, you're actually losing most of your income to tax. So would you be able to answer the question? So how many locum sessions one can do realistically to maximize income fully in view of tax?
Well, broadly speaking, as you and I were talking about to say last week, if you're pushing up against that 100,000 total income, so income after all expenses plus any other forms of income, if you're pushing up against that 100,000, then it probably becomes not very efficient to do those extra few sessions, because that's when you're starting to lose tax at the effective rate of 60% within that band. So 100,000 really keep an eye on.
Okay, great. It says here, if you're a limited company but wear two hats within the said company, are you considered two separate entities for the purposes of corporation tax and when taking out dividends?
No, the company is the entity for corporation tax. So even if you do two roles within the company, it's the company that pays corporation tax. And dividends are returned to you in return for your shareholding. So it's not in relation to the work you do for the company, it's the ownership and the number of shares you have in the company. So I think that it's not an easy question to answer, because I'm not quite sure what they're getting at with that. Okay,
so maybe if they can email you directly to expand on that, that would be useful.
Yeah.
And someone else is asking, do we have to become VAT registered as a limited company? That's quite an interesting one.
Exactly the same as if you're self-employed. A company doesn't alter the VAT liability position. It's basically if the total VATable turnover is more than the VAT registration limit, which is 85,000. But a lot of medical supplies are VAT exempt, so don't count into the 85,000.
Okay. So we've had a number of questions about the timing of accounts. So is it a good idea to line up my limited company end of tax year date with my personal tax return date to make things more simple?
It certainly does simplify things. Yeah, March year end date for companies, it does make it easier. It's not vital, but it's easier.
Okay, great. Okay, just last couple of questions. People are asking, I mean, this has been a really popular question. So someone's asked, what do I do? Am I a limited company or sole trader, if I don't mind elaborating? And I don't mind elaborating. So I work as a sole trader, and I always have done, mainly because when I sat down with my accountant, we looked at things like pension contributions and the tax relief you could get and the accountancy fees for limited companies, which can be quite substantial. And I then made the joint decision with my accountant that it would be a better thing to say as a self-employed person. And someone else has asked, following on from that, what do most locums do? Is it better to be a limited company or sole trader? And I think we covered that during the presentation, that really it is going to depend. I don't know, Kirsty, if you want to elaborate on that in terms of, have you guys noticed that people are now switching more to a self-employed status from a limited company after the IR35 changes, or do you find it's a 50-50 split?
I think it's common, Serena. At the moment, it's early to say whether the limited company position is switching. It can only go one way because of the IR35 rules, but I think we should emphasise the number of limited companies we've got. We've got about 400 GP locum clients. I would think we've got a maximum of 10 limited companies. So the limited companies, from a tax point of view, only work in certain restricted circumstances, and every individual case has to be looked at in its own right. The key is taking accounting advice before you go down the limited company route. You can always move from sole trader to limited company, but it's not cost effective to start limited company and go back to sole trader. Which could be avoided by a conversation in the first place.
Okay. And someone's asked, well, a few people have actually asked about roughly the price of accounting for locum work as a self-employed locum versus a limited company. Can you guys just give obviously it would depend on each person, but roughly, just so people know as a ballpark for those that are
For the self-employed locum, we presently quote £595 plus VAT per annum, so that's a once-a-year fee when the tax return is completed. For the limited company locum, we're quoting £1,200 plus VAT per annum.
Okay, so that's quite a significant thing. And last two questions, I think. Do we get taxed on, I think this is for limited company, do we get taxed on gross salary or just the profits you make after tax?
For limited company, it's only the profit you make after tax. Same for a sole trader, it's only as an employee that you're taxed on the gross, less the expenses you can claim. So the profit is, for limited company and sole trader, you're taxed on the profit. Okay, someone's asking what is Capita, so I'm assuming that's a GP registrar who hasn't yet met with Capita yet. So Capita is the organisation that have taken over processing of pension payments for the NHS. So as a locum, you will send your pension payments to Capita for them to be processed. So hopefully that answers your question. There's another question about mileage. I think someone was a bit confused about whether they can or can't claim mileage as a locum. They can claim. So they can make the claim as an expense claim in accounts, either on those rates that we talked about, 45p a mile for the first 10,000 miles, or they can claim on a proportion of actual expenses. But that again is quite a complicated discussion to have. There's no right answer for anybody. It will vary depending on what sort of car you got, how much mileage you do. But yes, they can claim in these two methods of doing it.
Yeah, so this is for Aswin Thampi. So Aswin, your question was about My Locum Manager. So it automatically tots up all your mileage, and you can add in your home visit mileage. And then what I do is towards the end of the tax year, I press a button and all my expenses go to my accountant, and then he uses all my recorded mileage to then claim that as a tax expense for what is allowable for me. Okay, so I think we are now at a close. We've still got questions coming in thick and fast. So what I'd say is definitely email us. You know, we'd be happy to address your questions, but we're outside of the scope now of the webinar. I hope you found it useful, and I hope you've now got a better understanding of what you need to be doing, whether you're going down the self-employed route or limited company route, about keeping your records, documenting which expenses you need. I've already mentioned resources like the My Locum Manager resources page, where you can download for free all the expenses that you should be claiming for. BHP and ourselves have done a very detailed webinar on IR35. So if you're still unsure about how this may affect you, you can access that for free on our Facebook page or blog. There's also an article that I've done, which is a link for it's on the My Locum Manager blog, which details how you do the HMRC tool. And again, that was done with Christine from BHP. And I think Christine used to work as a tax inspector for the HMRC. She did a really she gave really comprehensive advice for that, actually. So it's helped quite a lot of people. So do take a look at that article if you need to. We're going to be sending out a link for this, so you can watch it again should you need to and have access to the slides. And we will be doing a whole series of webinars for you on lots of issues, from pensions to additional tax things to kind of saving more money to mortgages. So keep track of all that on our Facebook page. Kirsty, is there anything you'd like to add before we sign off?
No, I think that's just it. But as you, just to reiterate what you say, if anybody's got any questions, then please email me and I will get back to them.
Oh, thank you. So thanks everyone, and see you at the next one. Good night. Bye.
Bye.